Hey, good evening. Ken at Tortoise Capital Nightly Strategy Podcast for August 20th, 2024. Sniper trade of the day. So we want to review the setup from yesterday that triggered today's sniper trade. We were looking at CLF. It's worth taking a look at the report discussion from last night, 08/19, in which we spent a considerable amount of time talking about CLF and its sell-off from 1650 down to 1250, which is about minus 25% sell off in a great American steel company. And you can see how the grind down, the panic sell, the attempt to stabilize, one more sell, and then terminated in a doji on Friday. It had a gap up. It ran up more than an average range and then came back down and closed at parity, but it closed above the previous day's price action altogether. It showed that there was buying interest, but nothing to hold overnight. So we established this as a compound critical state in which an upside breakout could lead you all the way back up, or a breakdown below yesterday's low is tradable. And then if it broke below the doji low, really tradable on the downside. So if you can have a non-directional bias and manage your emotions, this is a compound critical state, meaning that there's a larger than normal move possible in either direction in a shorter than normal period of time. And that's what we got today. That was my priority symbol for today. So we'll take a look at what actually happened. So we're going to zoom down just to the 10-minute charts. So for point of reference, this orange box this is an R5 sized stop, which means we take the range stat, which is the average range plus the standard deviation. We divide that into 10 equal pieces to come up with the minimum manageable risk box. And we call one of those boxes an R10, meaning the range stat divided by 10. If you take two of those boxes, you get an R5, meaning that you're taking 1/5 of that maximum reasonable intraday move. So that becomes an R5. Half of that box would be an R10. That is typically the minimum manageable risk box. When I'm on the 10-minute charts, I typically enjoy using the R5. It still means if there's like a gap down and it starts to reverse and I give it an R5 off the bottom, I can make an entry to go long and still have confidence that on a normal move, it could move as many as 3 or 4 of the size of my R5 risk box. And now I have a favorable intraday move that's calibrated to the statistics and the volatility of that. So for purposes of this exercise, what I'm showing here is the relative size of the R5. That means if it were to break down below yesterday's low, and if we got short here, then we could see 5 of those size boxes, 1, 2, 3, 4, 5, before it became an abnormally large move. So you can see that even if we use the full R5, then there's plenty of downside move. If you can use half of that, you basically have an R10 and an R10. So that in CLF right now, that is 7 cents, meaning that the maximum reasonable intraday move turns out to be about 71 cents. With rounding error, that gives you 0.07. And if you use the full R5, two of those 7-cent boxes gives you a 14-cent box. And that's the size of that orange box is 14 cents. So just for point of reference. So that's yesterday's VWAP that closed right here. and that's the R30, the SMA 30 that rolled over. This is the 30-period regression line that's showing steeply down because the second half of the move yesterday was decidedly down. So this thing is poised and ready to collapse, or it could be a nice rebound and go. If it takes off from here, if there's no gap and it takes off, there could be, again, 5 of these orange boxes to the upside. So that gives you a sense of the potential of the normal move that we're trying to trade. Well, let's see what happens. It gaps down and starts selling off, so I instantly get short because it broke through the support levels from yesterday and broke below the low. So I get short here, and then I'm going to use, because this is a possibility for a runaway downside move, I'm going to use the minimum size risk that I think is appropriate. In this case, a 7-cent stop. I'm using the R10. So my initial stop is here, and I'm short from here. So there could be 10 of those moves to the downside. So another 9, because you've seen one from here to there. Okay. That's the statistics-based intraday trading style that we use. All that thing does is just grind down all day. When it comes back just after lunch to right around 2 o'clock, the R10 reverses. It comes up and hits the PSAR. So I just take that exit. So for my unit of risk with a routine entry, I get 1, 2 units of reward. So for every $100 of risk, I make 200. And again, that's my calibrated step ladder right there, just to show you with a little more precision. For the 1 unit of risk, 1, 2, that's what a 2R, so this was a fraction larger than that. Okay. So that's not even a massive move in that direction, really. This was kind of a grinding day. So this was not a panic sell-off day, but it was a sign of weakness. And the rest of the day closed, and it closed poorly. So tomorrow, this downward narrative is still in play. We're below the 3-day and 5-day anchored VWAPs. We're below the 1-day VWAP. We're below the Bollinger Band mean. It closed near the low of the day. There's no joy in this one. So as soon as it goes below 1240 tomorrow, I'll be ready to pile on to the downside. How do the bars not keep you unclear?
So my question is, how do the bars that where the price comes back into the skin of the dragon, it crosses the spine of the dragon?
Well,
Yeah.
I was committed on this one to let CLF just fail. It was poised for a big failure, and I was just going to leave that one in play and let it run. CLF, along with Devon Energy, is one of those that it doesn't oscillate much like a regular index. It tends to be very directional, and I had a buffer in play. So if this was like a liquid index like SPY or small caps or Qs or something, I would play that very closely. But I'm playing for a big multi-day meltdown. And once I got a little buffer in play, and all of this is below the VWAP all day, I got no, I'm in no hurry to get out of it. I'm letting that thing cook.
Okay.
So that's really set up because of the very nature of this the previous move, which I taught. That's a 10-minute. Because this was the first day of recovery effort after the 30-day sell-off, and it closed here. That thing just feels like it wants to collapse. And when we got below this level, I'm just committed to letting it run all day As long as it's below the VWAP, I'm content to just let it cook.
Okay.
If I'm on a tactical play, I'm either on 1 or 3 minute bar, 1, 2 or 3 minute bars, and I could be fine tuning this move in here. But on 10 minutes, I'm really just letting that train gather speed and go. Now, I exit in here because I don't want any overnight risk, because this thing also tends to be gappy, and I don't want to be on the wrong side of that. So my commitment was to try to just stay with it. As long as it was below the VWAP, I was good to go. This is, Cliff is one of those where you don't have every mother's son trying to trade every bar. Whereas like an index, you got a lot of guys that are eagle eye and has more volatility. This is more tends to be more directional. Just
Got it.
trades
Thank you.
differently. Okay. All right. Let's go to the traders. This is Tim from 3P4 Traders, successful graduate of our program, running his own little business trading now, full-time trader. And he's trading AMD. That's one of his specialties. And he's trading 3 minutes. He's built out all our indicators on TradingView and offers that as a service. He uses uh, TradingView to help him calculate all his um, various parameters. He tries this one long, it cuts it quick, re-enters, pays off. So the short was he loses one, but he gains three on the rebound. He gets short and gets 1.1. The last little piece is 0.3. So he nets 3.3 with systematic trading on that morning move in AMD. So just perfectly framed, perfectly traded. He also is trading Devon Energy, one of our intraday favorites. There was a kind of a big gap down. When it rolls over and makes a new low of the day, he gets short, standard risk to the PSAR, comes back and hits the PSAR, routine exit, 1.8. This is where he gets his no lose plus dinner for two to lock in the gains. He lets it cook for a while, just following the PSAR, and that's like his jump stop. And then he just follows the PSAR for 1.8. So that's a 5 hour day on those two symbols for Tim. Very well done. Hamad over trades here in EWZ, gets caught up here in the chop after some initial efforts. Not so good. Well, that's the same chart. And then on XLE, however, he gets short and covers. And then the beauty is the re-entry, and he makes 3.6 on this one to turn this into a positive day, despite the lessons learned on EWZ. He does a nice job of recovery. This is Jonathan in our coaching program, pulling in 3.7 on XLE, and that's not even getting the first move out the gate. He gets the second leg, and that's a collapsing dragon. Why? Because, let's see. Yeah, so he's got the downward move that recovers. There's your R10 belly. When this rolls over and it's below the VWAP and the VWAP is down and the river is down and the dragon is down, that's his logical entry, smashing it. And then he takes the spine of the dragon for 3.74. Nicely played. Somewhere around +2, I'd have been really tempted for a second position, but I understand that. He's working on converting his DIA trades to YM. That one was -0.7. So he comes in over +3 for the day. So nicely done all the way around. Take a quick look at the daily report here. So the 150-day look back. Off of that sell-off low almost a V bottom looking thing, has recovered all the way back to the black line. So we're only that far from the all-time high. Now, the fact that this is starting to roll over, as we'll see, is there's a feeling of certain contentment right there. And everybody that made money on this move is going to be also concerned about protecting against a sell-off. So this would be a natural place to start seeing weakness. We actually saw that in tech and in NVIDIA today. So I'm going to be mindful of that potential for tomorrow. You can see when if we just look back to 30 days, it's a little easier to see how this volatile sell-off and then nice recovery through the dragon. And now you can see it's starting to stall, almost starting to round off and roll over. You can see the R10 is rolling over. So to me, I think you got to have a stop around 556. If that fails, you could play tactical short to 546, which is the SMA 30. If it breaks below that, then the 5-day low and the 10-day low are now in play. So this to me asks for caution and preserve gains. Conversely, if it breaks above 565, that's a new all-time high, and there's no resistance overhead. Less probable to me, but I'm aware of the potential. What I do like is that what we have today, even in today's little sell-off, looks very much, that's a little doji right there. One of the smallest ranges of the last 30 days, maybe the smallest range, except for this. The last time it was at an all-time high, look how small that range was. That's why, to me, the risk manager in me says, hey, be mindful of the fact that after a nice run up of 10 days, it wouldn't be surprising to see some profit taking, which could then lead to a little panic, could then lead to a lot of panic, which led to the buying opportunity down here. This is where all the channeling and the overreaction signals on the swing patterns all kicked in right here and made that move available to us. Looking at dashboard one, bullish volatile, overbought in every dimension, volatility favoring sharp moves. Nothing unusual otherwise. Big moves up in gold again. Treasuries for defense. Maybe we're seeing a little rotation there to preserve some gains. But otherwise, consumer staples and healthcare. So it's not tech leading the way. In the Dow, it was big mover up in Walmart, Microsoft and Merck, IBM, Home Depot, but some weakness here. Boeing, Devon, Intel, NVIDIA, ExxonMobil. So that's, for the NVIDIA watchers, one of whom I am, this is it's been outperforming on all the time frames except today it was a big percent loser. So we just got to be mindful of that. It's moved from 92 in the last 15 days, from 92 to 127. So that's taking a day off is earned. Only one auto framer today. That's oil at 2.8. Everything else is so close to its 10-day high that you don't get much. It was such a small range day that there's a lot of squeezes in here. You can see this is the reward to risk you get if it moves a range stat divided by today's range. That's how tightly compressed these things are. And you can see how tight the market was compressed when you see names like DIA is 4-1. SPY and the Qs are 2 and 3-1. So that's a real range compression on all the major indexes. And that means everybody's waiting for the next guy to take the lead. And so no matter which way it starts going, look to see short-term momentum starting to pile on to see if they can induce a stampede. That's what tomorrow's going to look like, I think, is that tentative move out, and then is there momentum to be scared? And I think the downside momentum is going to be triggering people that need to preserve gains from this last recovery run. So I think people will be sensitive to that, given the previous 10% correction. Hey, it just recovered. They don't want to put that at risk again. So I think they'll be more sensitive to cashing tomorrow. The NDX, you can see, was mostly, I mean, it was a mix of extreme moves, the haves and the have-nots. The ones that were really weak, Devon, AI, Boeing, Pfizer. Here's your metals and mining, your U.S. Steel and Cliff and Nucor. That's one of the reasons, Jay, I'm ready to stay with Cliff on the downside. It's in such a weak position as an individual symbol, and its whole sector is getting slaughtered too. Like metals and mining as a sector is XME. So the whole metals and mining is down, and Cliff is the weakest one of the uh, steel companies that I track. So that's one I'm ready to stay with that on the short side, maybe longer than I might just a regular index. So special
Okay.
case. Okay. We'll just take a look at the Z scores. So the nice little recovery here off of that V bottom that we saw has brought it back up to the top of the river. The 30 has reversed. The 10 Z score has moved all the way up to here, up around Z2. So that is another reason I am prepared for that run to be done. And it wouldn't surprise me to see it roll over and come back towards the middle of the Z scores. So tactical weakness would not be surprising.
What?
All right, that's everything we got for tonight. We'll get this published and posted. And just as a heads up, I'm just gonna start these nightlies at 9 o'clock now. We're getting ready to resume the soccer practice for the kids for the fall season. And rather than being rushed, and rather than wasting your half hour, we're just gonna start them all at 9. That gives us a chance to do the coaching properly. And so going forward, the evening sessions will be 9 o'clock. And Friday nights, I'm going to be doing a Q&A session for the foundations students that are starting up. So I'll get that annotated on the website. All right, guys, take good care, and we'll see you tomorrow, ready to rock.